Also, there are some chat information. Yes. Yeah. So I know you can type in the chatting box, but if you want, just feel free to talk out, right? Because I think in this unit, so a lot of questions are very subtle, but probably they are also important for everyone here. And while I'm sharing my screen, sometimes I couldn't really see the chatting box information.
Mm-hmm.
Okay.
Oh, continue.
Continue. Okay. Yeah. So, of course, last week in the lecture, the topic was about internal control. Is it right?
Yep.
Yeah. So I hope everyone here must be very, very clear about the topics each week, because the topics are just a few words. They are the key summaries of the key words for the week. Okay. So then now I'm sharing the page about the COSO model. I know in some of the other units, the model has been changed a little bit, but in this unit, we're still using this model. Of course, in the auditing standards, we are still applying this model. Okay. So are you familiar with this model or not? That's COSO internal control framework, in which there are 5 essential elements. What are they? The control environment, and then the control environment, and then the entity's risk assessment, followed by the information system, and then control activities. Finally, so for all the control components, we also need to follow up the monitoring process. Okay. And also, it's important in the 5 elements. In the 5 elements, control environment, it seems to be the overarching one across the whole entity, right? And also the risk assessment process will be applied into different parts of the organization, but at the same time, it's still overarching, because yearly the company will apply the universal risk assessment strategy into the entire entity. So, and also if there are some problems from control environment or the risk assessment process, it actually also means the arising control risk will be more pervasive rather than just assertion specific. Okay. And then the following 3 for the information system, control activities and monitoring, they tend to be a very much more specific, more relevant to individual accounts, a few specific accounts, or a few specific assertions. Okay. So here, that's the control activity. If we record to the last page, so in these control activities, we are having, that's the 4th components, 4th elements in the framework, okay? Let me know you're still hearing, you're still listening.
Yeah, I'm here.
Okay, all right, yeah. So in the control activity, because in auditing, we need to make sure that the company has a good control. And also in today's lecture, we are talking about the test controls. So what can we test? We're actually testing upon different types of activities, right? So control activities are very, very important for this auditing unit. So if we summarize the control activities into 4 categories, it's important for us to know what are the 4 categories. So they are performance review, information processing control, physical control, and segregation duties. All right, and then under the information processing control, if it is applied to the whole system, that is general control. If it's just applied to a few applications, that's application control. In application control, it also includes input, processing, and output. Okay. So my question here for control activities is, so do you know what is segregation duties? So those incompatible roles shouldn't be played by one person or by one department, right? So what type of roles are not incompatible? For example, the transaction dealing and authorizing. So execution and authorizing shouldn't be done by the same person. So custody of the physical assets and accounting roles shouldn't be done by the same person. So those roles are not combined, shouldn't be combined, should be segregated into different persons or different departments. Also, do you know what do we mean by the performance review? No? Yes? What do we mean by performance review? So someone coming to review the other one's work. So who's usually the person to do the performance review? The senior role, right? So if you have a senior officer and the junior one, the junior staff clerk, and still in the internship, of course, the senior one is going to review the junior one's work. The manager could review the clerical work of the staff in their department, and the partners can come to review. The CFO, CEO, senior managers can come to review the manager's work. So performance review is usually reviewed by person at a higher rank. Okay, still following? And also, so this page is extracted from the slides. So different types of control activities actually are relevant to different types of assertions. So I think you must understand it. You have already got that from last week. Okay. And I want to just emphasize the key issues from last week, and also could be carry forward into this week's lecture. So when we are doing auditing, when we talk about control and test controls, what do we do? So usually if it is not pervasive, it is just specific to certain accounts. In any case, we are likely to have to identify which account is relevant to that case. And then for the case, we also try to identify what, because in each account, so there would be a lot of relevant assertions. So we need to identify what are the key assertions relevant to the case, to this account, and also to the case. And in analysis to the control problems, because control is mainly about the process, the activities, the transactions. So those assertions are usually the transaction-related assertions. So in control-related cases, if we can identify accounts assertion, and then you could link that to the proper control activities to that account and also to that assertion. And then if you can identify what are the proper control activities, of course, in response to those key control activities, you can design your test control. Okay. Question? The other aspects I want to emphasize here is still about the cases. So in each different types of cases, when we are evaluating the company's control problem, internal control, assessing the company's internal control, it's likely we will have a assessment to the company's control risk, probably overall risk, control risk, or the control risk in some specific area. And then based on your control risk assessment, remember, actually, you could develop the proper control, the proper audit strategy. So if the control risk is not very high, you could rely on the control, and then you could adopt the lower assessed control risk approach. If the control risk is very high, or you think you don't want to rely on the internal control of this company, of course, you are going to adopt the the predominantly substantive approach. That means a lot of detailed substantive audit test. Okay, all good? So, all right. So I hope, so after this, then we move on to the tutorial questions. And actually today, the tutorial questions are very simple because I think most of you are doing your assignments. You just finished your online quiz and then you are doing your assignments. You need to submit that this week. So I would expect you to relax and focus more to that assignment task. Okay, are you ready for the questions? Of course, we have done the online quizzes, so now our focus will not be the multiple choice questions anymore. So what we are doing today would be the case studies because in the final exam, everything is about cases, small cases or big cases. Okay, so ready?
Yes.
Okay. So this is the number 1 tutorial question. Okay, so of course I was not involved into the tutorial in the last few weeks. So actually this week I need to touch base with you in a lot of things. So if we are doing the case analysis, what is your approach? Also here we have very simple cases, but still I would encourage you to read the requirements first to know what you are asked and then read the case. Okay. So the question here is identify the weaknesses in the company's internal control concerning the purchase and payment function, and also explain why each is a problem and provide a recommendation on how to overcome the weakness. So now I just hand it over to you. Just please let me know if you have already got answer or you haven't. Who has prepared? Please let me know. Has anyone prepared for the question or not? Not really? Okay. You still have time to do this in the class, okay. So are you able to identify the internal control weaknesses and also recommend the safeguards? Hello? So here is the time for us to use the chatting box. the numbering of invoices?
Yeah, they are pre-numbered as opposed to sequential. It doesn't say if it's sequentially numbered or not, or if it, so usually you want the invoice to be sequentially numbered, so that way it makes it easy to find out if one has been lost or something along those lines.
Yeah, so it is the purchase one. So who's going to issue the invoices?
A supplier?
So supplier. So how can you make the purchase invoices actually numbered? Mhm. Of course, you can still actually pre-number the already numbered purchase invoices, right? You can do another list to give the second number, but it's not very easy to do that. But you do have a lot of other documents pre-numbered, like the purchase order, like the purchase requisition.
I had a question
Mhm.
on the purchasing purchase requisition. One copy is sent to the accounts payable department. That's before the order has even been approved. So could the accounts payable department make a mistake and pay that even though the supply hasn't been made? Or
Yes, so I probably need to make it this way, could be better. Okay. So you mean the copy 4 of the purchase order has been forwarded to the accounts payable department, right?
no, I mean the first part.
The first part,
yeah.
the purchase requisition.
Yeah, the copy 2 is sent to the accounts payable department.
Okay, and also copy 4 of the purchase order also sent to the accounts payable department, but
Yeah.
was the payable department actually paying?
They haven't paid it, but could they, maybe they might make a mistake and pay it without an invoice?
So yeah, so the accounts payable department here, right? They prepare the pre-numbered payment voucher together with invoices, requisition, purchase order, receiving notes to the financial accounts, and the financial accountants actually will pay.
Okay.
Yeah.
Yeah.
So it seems, is this a problem now?
No, it's not a problem.
No, not a problem. Okay. Yeah. Okay. Any other possible problem here? Okay, so let's read together. But if you identify any problem, just speak out, okay? So the company is a major manufacturing, and the store department requires items to be purchased. So first they got the purchase requisition, right? And this is 3 copied and also pre-numbered. So for the three parts pre-numbered purchase requisition, is this good or bad?
That's good.
That's good for the multiple copies, and also pre-numbered one, that is good. So also it has been approved by the store manager. It seems also a good practice, right? So
yes.
1 to purchase department, copy 2 payable, copy 3 so in the store department. So that is step 1. Step 2, so based on the purchase requisition, the purchasing department. So the first department was the store department, right? Okay, so now the purchasing department have another 4 copy purchase order, so also to different departments. And also copy 2 and 3 are forwarded to the receiving department. And then step 3, receiving department, receive the goods. And then when they receive the goods, they stamped order received. Okay. So on the 2 copies of purchase order here, right?
Yeah.
Then also prepare the receiving notes. And 1 copy of the receiving notes record is kept in the receiving department, the other one forwarded to the accounts payable department. Why couldn't I get the color now? Sorry. Okay. So then payable department check there is requisition order, receiving record, invoice, and payable department approve for payment. Okay, so payable department also prepare the payment voucher, and then together with those requisition order records, invoice together to the financial accountants. Okay, so that's another person. The accountants then sign on by receiving those key documents, these financial accountants sign the payment voucher, complete the payment by bank transfer, and return those supporting documents to accounts payable department. And then by the end of the month, the accountant department, the assistant accountant, do a sequential check of all the pre-numbered documents. Also, they get the monthly bank statement, prepare the bank reconciliation, and investigate the outstanding items.
I think one of the internal controls is the payment is only approved by 1 person, financial accountant.
So the financial accountant actually has the power to do the payment by herself. Is that what I mean?
Yeah, there's no one who checks his or her work.
So no one check his or her work. But by the end, actually, there was something checked. For example, the assistant accountants check the sequential check of all the documents.
Yeah.
And also they have done the monthly bank reconciliation by the financial accountant.
Yeah. Yeah, that is a check, I guess. But I think best practice is to have 2 people authorize a bank payment.
So I guess here what I mean here is, so the accountant, financial accountant who make the payment, who made the decision of the payment and record the payment, but also at the same time, she also did the bank reconciliation by herself.
Yeah.
Okay, so payment, authorization of the payment, and also the follow-up bank reconciliation has been done by the same person. Yes, so that is one thing, one problem. If we go back to the components of internal control framework, what is that? Control activities. If you link to one of the key control activities, that is a problem in the segregation of duties, is that right?
Yeah.
Okay. Any other problems here? No answer? So here, that's a case. So for us, not just reading the surface information, actually you need to think. So that is one problem. I do agree with that. Are there any issues? For example, did each department or each person in the system actually perform their role properly?
I think the receiving department, they just stamped order received. There's no signature or any information as to who received the order.
So what is the proper role of the receiving department? Once they receive the goods, what they should do?
I think they should at least sign their name on the documents on the.
Yeah. What do they sign for? Why should they sign? They just recognize they receive the goods.
Which staff received the goods? Who received them?
So
because a lot of people
that?
may be working there. They want to know specifically who did it.
Yeah.
If
So
there's a
the
problem,
person need to sign on that.
That would be a good idea, I guess.
Yeah. Okay. So suppose you are the person. So once you receive the goods, you sign. Is that right?
Yeah.
Yeah.
So
That would be the idea.
yeah. Somebody knock your door and give you something, and then you sign.
Yeah.
Do you need something?
I think Alex said that verify the goods and what was ordered.
Yeah. So Alex said also you need to check the goods received. But did they do that?
No.
No. Okay. So probably that's another problem. Anything else? We are running here for a while. So here, actually, the receiving department didn't do the things properly. Oh, okay. Actually, I pointing in a different one. So it's here. It should be here, right?
Yeah.
Okay. So our receiving department need to check the goods and then stamp, and also need to sign properly. Need to record the details of receiving goods properly, right?
Yeah.
Okay. So they didn't do the proper work. What about accounts payable department? What about the requisition department, the purchasing department? What about the requisition department, the store? Did they do their work properly? They have followed some procedures, but have they 100% follow the correct procedures? So for example, receiving department didn't check the goods. That's not proper, right?
Yeah.
So accounts payable department, what do they check? What they check was there is a purchase requisition, there is an order, there is a receiving order, and there is an invoice. Then they approve. Is this enough?
They need to check whether the purchase requisition, the order, and were issued by the relevant persons who are supposed to sign and check for it?
Yep. So actually, so they need to check there is such documents. But at the same time, they also need to check the documents have the correct details. Is that right?
Yeah.
Okay. All right. So we have identified something. So upon those points you have identified, do you have any recommendations? The first one we mentioned was in the payment process, actually there's no proper segregation of duties. So what is a recommendation?
Have another person check the bank statement
So
instead
for
of the
those
financial account?
yeah, so for those incompatible roles, segregation of duties, right?
Yeah.
And then, so for the roles played by each department, they skip the detailed check. What is your recommendation? Of course, so add back those proper control activities. All right?
Yeah.
Okay, so let me show you the answer to see if they are reasonable or not. So I want to emphasize, of course, you probably come up with a different list of weaknesses. It's okay. For example, someone may combine the number 3 and number 4 into one, right? It's fine. But for each of the problems you identify, you need to clearly state why it is a problem. Why it is a problem? Because if the control is not there, then it could cause errors, mistakes, or fraud in the organization. That's why it will cause risk. Is that right? So you need to clearly identify what is the leading problems. And then for the recommendations, of course, recommendation will be directly related to the identified weakness. Okay. So I mean, so in this case is not very complex, but what we want is your answer should be logical. For example, you put a lot of recommendations. The recommendation themselves are reasonable, but if they are not logically flew from the identified weaknesses, you still couldn't get any mark. All right?
Yeah.
Okay, so the second question, very simple one. So still coming first from the question, identify the internal control activities. But here the internal control activity we want is that one address the payment risk, the risk of payment being made before the goods are delivered. And also what is a closely relevant assertion. So the whole case, it's many, but actually the whole case is talking about the payment. So what are the controls here? The first is requisition documents. The payment transfer, the bank transfer requisition is pre-numbered. And also prepared by the authorized accounting staff. But is this one directly relevant to making payment before the goods received, goods delivered? So it is a proper control. It is important control, but it's not directly relevant to address the risk of payment being made before the goods are delivered, right? So it's a good control, but not specific to this question. All right? No, sorry, I need to leave the time to you. So what about the second one? Accounting staff then match details of the invoices to receiving report, match details of invoice and receiving report to the purchase order. So is this one directly related to the risk of payment before goods delivered? So if we no, what is the purpose of this one?
Because I don't think there'll be a supplier invoice before the goods are received.
So we didn't really see goods are received, we say goods are delivered.
Yeah.
Okay, just stock this for a while. And then the third one, bank transfer requisition together with the above supporting documents forward to the senior staff member for review and authorization. Okay, so it seems we have got 3 steps in the control. Okay, right?
Yep.
So which one or which 2 or which 3 are specifically addressing the risk of payment being made before goods are delivered? In other words, what type of control activities can control the payment risk before goods delivered?
I think the second one, that's the one which is addressing the risk of goods payment being made before goods are delivered.
Because at the time you receive the supplier's invoice, and also you have also get receiving notes if possible.
Yeah.
Right? So that's a few steps to ensure goods delivered and probably also later on goods are received. So the second one, what was the relevant assertion here for the second one? So actually, if we talk about assertions for controls, so all the assertions usually would be about the transactions assertions, right? So what are the assertions probably could be available? Occurrence, completeness, accuracy, classification, cutoff, presentation.
Maybe occurrence.
Occurrence, why?
Whether or not the goods were delivered.
So the goods has delivered. If it has occurred, this delivery or goods has occurred, then you can start the payment process. Otherwise, you couldn't do that. Okay. All right.
Yeah.
Any questions from the floor? Easy, right? Third one. Question is, for each of the above situation, explain the impact on the control risk. Key accounts, key assertion. You could start from this first one. So here we have three cases, three situations, right?
Mm-hmm.
So in the first one, the company is a large manufacturer that used B2B e-commerce to transmit purchase order to the suppliers. Suppliers and electronic transmit the invoice, which is credited directly to the accounts payable. Goods usually take 1 or 2 weeks to arrive. Once they are received, goods receiving notes is raised by the company and then matched with the invoice and payment is authorized. So impact on control risk. The question here is actually asking you, so for the situation described here, is this increasing the control risk or decreasing the control risk? Or in other words, is there a control problem?
I think the control problem is that the invoice is credited before the goods are received.
Mm-hmm. Why it is a problem?
If we take the cutoff assertion, I guess, the liability is recognized before it has arisen.
Mm-hmm. So likely early recognition of payables.
Yeah.
Mm-hmm. And you are not sure if the transaction is true or not, actually, because just the evidence is just from suppliers' electronic transmitted invoice.
Yeah.
You don't even have the delivery notes or the shipping documents, right?
Yeah.
Okay. So what is the key accounts?
The key accounts would be accounts payable.
So accounts payable. Yeah.
Yeah.
In accounting, sorry, what did I do? Okay. Right. So in accounting, so when you record this transaction, so paired with accounts payable, what is the other one?
Inventory.
Inventory. So if that also means if accounts payable is overstated, inventory is also going to be overstated, right?
Yeah. Yeah.
Okay, so what is the key assertion here?
I guess cutoff and occurrence.
Cut off and occurrence. Okay, here I just want one, because here we ask you assertion affected, right?
Yeah.
Okay, so please choose the most important one. Which one?
Most important would be occurrence.
You agree? So this is, who's speaking there? This is Raj?
Raj, yeah.
Okay, Raj. So, so for the others in the room, do you agree with that? Any other thoughts? No? Okay, the second one. another company's credit officer whose primary responsibility was setting and reviewing customers' credit limit retired, and no one has filled in the position for 6 months. Okay, this one is easy, yes. So it's going to increasing or decreasing the control risk?
Increasing.
Increasing, why?
Because I would say maybe the invoicing staff, the sales staff are now setting their own credit limits. There's lack of credit control.
Credit limit control is important. Why it is important?
It opens the company to risk of bad debt.
So because it's relevant to bad debts. Okay. Okay. So bad debts. So the bad debts issue. Okay. So which the key account?
Key accounts would be, I guess, provision for bad debts.
Okay. Provision for bad debts.
Yeah, and
what is the upper one?
Accounts receivable.
Accounts receivable. So what is the proper assertion here? If we are talking about provision issues, what is the assertion?
I think assertion would be accuracy.
Accuracy. So that is the overall accuracy of accounts receivable, right?
Yeah.
But if you want to make it very, very specific, that's the completeness of the provision for doubtful debts and also accuracy of the provision accounts, right?
Yeah.
Okay. The third one, Kent Limited failed to discover employee fraud because bank reconciliation was not being done each month. Is this increasing risk or decreasing the control risk, or actually not relevant?
This is an increase in control risk.
Still increasing, why?
Because the control measures were not adequately done.
Mm-hmm. Which control measure hasn't been done?
The bank reconciliations were failed. They failed to do the bank reconciliations on a monthly basis.
So that is essential control was not in place, right?
Yeah.
Okay, so which account is relevant here?
Bank.
Bank, cash.
Cash, yeah.
Okay, which assertion then would be the most relevant one?
The assertion would be valuation.
Mm-hmm. So bank what, sorry?
The assertion would be valuation.
Valuation, so accuracy, valuation, and what is the other one? Allocation, right? Okay, but here if I just want you to choose one, which one you think is the most directly related? Occurrence of what?
occurrence of fraud, but I don't think that's
So if I choose if I can only choose one, I probably choose completeness.
okay.
I can choose two, I probably could choose occurrence and completeness. If I can choose three, of course, I'm going to choose all of them.
Okay.
All right, okay. All right, so this is
Yeah,
going to show you after the tutorial, right? So last question. So still about internal control weaknesses. But in this question, we also ask you, are there any strengths? Furthermore, we ask you, how would that internal control assessment affect your audit approach? I can give you 3 minutes to do the question.
okay.
Okay, we have, except for me, we have 7 people here, right? Can each of you identify one possible strength or one possible weaknesses in the case? Please speak out.
I think one of the weakness is that the warehouse manager is the one who places the order with the supplier.
So what's the problem here?
There is no
So actually placing order or the warehouse storage are incompatible roles, right?
yeah.
Okay,
There's no segregation of duties.
about segregation of duties, okay. Who's the next? Hello? Maybe you're new, okay, yeah.
This is this is still sort of a lack of segregation of duties, but the
Yep.
warehouse manager is also responsible for checking the goods and ensuring that they are of good quality.
So the warehouse manager also checking the goods. Still about segregation duties and also focus on the warehouse manager. Second one. The third one. Please, I need the third one and then we move to the next step. Okay, so look at the first one. So just looking at the first step, warehouse manager, order. So do you think the ordering process is proper?
No, there's no requisition that is raised. There's no segregation of duties.
Okay, we mentioned segregation duty already. So except for segregation duty issue, are there any other issues?
I think a strength would be that
Mhm.
the warehouse manager phones a couple of suppliers to obtain quotes
Mhm.
to get the best price possible.
So yeah, so get multiple codes rather than just focus on one code could lead to possibly better price. Okay. Mhm. So the manager then order from one of the supplier by telephone and confirm the order by faximile. And the only documentation kept in the confirmation is a confirmation of order, which is kept by the warehouse manager. Did you see any problem here, or do you think it's very, very good control? Nope.
No, it's not a good control because the receiving department doesn't have any documentation, neither does the accounts department.
Okay, so other department didn't get any documentation. So the order was confirmed, was ordered by the manager, confirmed by the manager, and everything is done by telephone, right?
Yep.
Okay, so we don't really have enough time to do a detailed analysis of that. So we did identify a few of the internal control problems. The most important one is the inadequate segregation duties in different steps. But in individual process, in individual steps, actually there are also some detailed issues. For example, no negotiation, not checking the key documents, not checking the goods, etc. Right? But there are strengths here. For example, the manager did check the goods received, as I mentioned. When they received the goods, actually they did stamp, they entered, they have some checking procedures, right?
Yep.
Okay, but so what is your assessment of internal control based on your analysis? And also, how is your assessment affect the audit approach? I can show you the answer because we need to move to the lecture. So apparently, so from this case, it seems they have a lot more weaknesses compared to the strengths. And also, in terms of the severity level, weaknesses are more serious compared to the strengths, right? So I guess all of you here would agree the control risk would be high. Okay, is that right? So if your assess control risk is high, what is a proper audit approach you are going to recommend? So here that's audit approach. It could be replaced by other words, audit strategy. What is the one you want to recommend? So because the control risk is very high, so it seems you want to adopt a more predominantly substantive approach. Here we do have a note here. So because here the company is a small company. For small companies, it's not likely they can get proper segregation duties. So that's why in a lot of small companies, auditors tend to use the more predominant substantive approach compared to rely a lot on the control. Okay?
Yeah.
Okay, so that's it. Thank you, and let's have a 2 or 3 minutes break, and then we'll come back to the lecture.
Okay, thank you.
Okay. Yeah, thank you. So stop the recording.